right, good morning, everybody, and welcome to another session here on Facebook Live. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all every single Thursday. If anybody's new, just to give you a little insight here on what we do. We go live every single Thursday at around 11 o'clock Eastern in the morning, just like right now, where we talk about what's going on in the market. We'll talk about a general topic for the session, and then, as always, we like to finish off with the fan favorite of analyzing any stock that you want to take a look at and showing you how you can do that with the stock advisory app in less than 20 seconds. So we've got a lot to go over here today. We've got a great topic, especially very pertinent for what's going on in the market right now. So rather be prepared and not need it than not need it, or than not be prepared and need it. So before we get started, just want to make sure everybody can hear me. Let me know in the comments if you guys can hear me. The video's coming through for you. Everything looks good on my end, so just want to make sure it's all good on your guys' end as well. But also, hey there, Daniel. And good morning, Bradford. Good morning. Greetings, Duke. Let's see, Erica. Good morning. Brian, I see a lot of people in here. Good morning, Mark. Deborah, Steve, Maman, Hank. Welcome, everybody. Hopefully you all are doing well. Everything looks to be good, so loud and clear. Everything's coming through. Awesome. Thank you guys for that. So now that we have confirmation that, let's go ahead and jump right into it here today. We've got a great session for you guys. So once again, thank you all for joining me here. If you're not familiar with this, we are going to be covering the VectorVest Stock Advisory app. It's about the most comprehensive trading tool you can have from the palm of your hand in your smart devices out there. So welcome. I see a lot of familiar faces, a lot of new faces. I'm glad to have you all here. Let's go ahead and take a look at what's going on here today. So as we look at the app, as we can see right now, we are 3 ticks into the green. Therefore, the market is bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. If we scroll down, as always, every single night we give you a daily update on what's going on in the market today, what news you need to be aware of for tomorrow, what headlines you need to be aware of, and how to prepare yourself for the coming trading days. All found in the market guidance videos every single night, Monday through Friday. Then we get down to the color guard, where we really start to analyze what's going on in the overall market. So we use these 3 indicators, price, RT, and BSR, to help us get an idea of where the market's at, where we're heading, all the information you need to know to make informed decisions on your trading in the market right now. Walter's asking, does this replay later on demand? Yeah, you can view all of our live streams, Walter, on our Facebook page. If you go to our Facebook page on the left-hand side, you will see a live section now that you can click on and view all the live streams we've done in the past. So you can come back and rewatch these after the live stream and view them as many times as you like. A discussion on GNUS. We can take a look at that here in a little bit. All right, so as we can see right now, the price did just go into did just turn green, since we're higher day over day and week over week now, just by a margin of a cent here. The RT is looking at the short-term price trend of the market, and it's cast on a scale of 0 to 2. So above 1, the short-term trend is up. Below 1, the short-term trend is down. At 1.36, we see the short-term trend is up and getting stronger, since we're higher day over day and week over week. Then we look at the BSR, or the buy to sell ratio. This is looking at the number of buy rated stocks in a database to the number of sell rated stocks in a database on a daily basis. Here at VectorVest, we give a buy, sell, and hold rating on each stock every single day. And when there's more buys than sells, obviously the buy to sell ratio will be above 1, as it is now almost 9, which could possibly be the highest level since I've been working here for over 9 years that I've ever seen the buy to sell ratio at. I can't recall a time that it's ever been higher than this, so we are setting record ground here. But if there's more sells than buys, then obviously the buy to sell ratio would be below 1, and that would show weakness to the overall market. Glad to hear it, Sam. Awesome. All right, so after the buy to sell ratio, we then get to the MTI, which stands for the market timing indicator. This is looking at more of the underlying trend of the market, the longer term trend, or actually the medium term trend, if you will. It's cast on a scale of 0 to 2, and above 1 shows the underlying trend is up, below 1 underlying trend is down. at 1.78, 1.79 yesterday. This is officially the highest level that it has been in over 10 plus years. So we're getting into record territory with the MTI as well. Just something to be aware of. It's not stating that, that we're overbought in the market right now, that the market's going to head south. It's just stating be careful out there. There is more downside risk than upside potential. So, take advantage of it while it lasts, but be defensive and be quick on your feet if the market starts to reverse or whenever it starts to, head lower here. So as we can see, 1.78, 1.79 yesterday, generally anything above 1.6 is showing that the market is overbought. So obviously we're clearly in overbought territory right now. As we know, we can still ride in overbought territory for a bit, but when that downturn comes, you want to be prepared, you want to be cautious. So that's why we're bringing it to your attention here first. We talked about it a lot last week, and we're going to continue to talk about it as long as we stay in those levels. After the MTI, we then get the trend column, which shows two parts of the trend each and every day. So the first part is referring to the primary wave, which is just simply looking at the weekly trend of the market. As we can see, it's up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part of the trend is just looking at the underlying trend of the market, or reiterating the MTI. Since the MTI is above 1, the underlying trend of the market is also up. After the trend, we then get the calls column, which stands for our confirmed calls. So if you're more of a long-term investor, more of a conservative investor, the calls are really where you're going to put a lot of your focus on. So it's our last signal we get into the market and our last signal we get to get out. As you can see with that green up arrow that tells us we're in a confirmed up call right now. So for our more conservative investors, we're just finally starting to take advantage of these nice runs in the market here. But then as we scroll down, we always like to take a look at the advanced declines. If ever you're going to be purchasing on a day, you want to check the advanced declines to make sure that you have a 2-to-1 bias. That way it tells us that if you're getting into a stock, there's a high probability that the stock you get into is going to be moving higher with the overall market for that day. You like to get started on hit the ground running when you start into a trade. And this is how you can get some confidence that you are starting off with that nice boost or nice win to your sales there on that day. So as we can see right now, we have 49% of stocks moving higher, 40% of stocks moving lower, not the 2-to-1 bias we typically prefer to see. So therefore that brings us a little hesitation. Even though we have 3 green lights, we see everything is, telling us buy. This tells us that there may be a little bit more weakness than what we realized in the market. There's not a really strong upward push today, so you may want to err on the side of caution if you're going to be jumping into something right now. But then as we scroll down, we take a look at the major indices. The Dow is up about 0.3%. NASDAQ's up about 1/10. S&P also up about 1/10. VectorVest composite up just slightly shy of 0.1% for the day. So markets did open up lower. We do see some softening here after yesterday's big day in the Dow where we had a 500-point day. So with that, just keep that in mind where the market is at. Keep in mind the MTI and be prepared. Awesome. Thank you, Joey. But if you're wanting real-time pricing, real-time quotes, all that, that's something I get asked in almost every single stream. Above me, you will see VectorVest 7. That's our desktop program. That does sync up to the mobile app as well. If you have the desktop, you have the ability to upgrade to a real-time version. And with that real-time version would mean that your app would also be in real time. If you're just using the mobile app by itself, it is on a 15-minute delay. So that's why you may see some discrepancies, but I do keep VectorVest 7 above me when I do my streams, so that way you guys can see that and see that we do offer real time. If you're interested, just simply give our support a call though. All right, awesome. So with that, let's go ahead, jump into today's topic. Now, markets have been rip-roaring higher. We had some consolidation. We broke out of that to the upside. Markets are continuing to move up nicely. But as we know, we're climbing that wall of worry. We see the buy to sell ratio showing us signs that we're grossly overbought. The MTI is showing us signs that we're grossly overbought. But markets still continue to defy gravity and move higher. So as an individual, we're going to cover 4 tips here today on what to look for to start to identify when you should start tightening up your stops or when you should start booking profits on your stocks as well. So we're going to cover 4 key tips to look for here today. Now, what I'm going to do is I'm going to go into the watch list section at the bottom and choose our Facebook portfolio or watch list that we created together. And we're going to use these stocks as examples of what to look for. So if you're writing them down, the first thing we always want to look for, we'll start off with end phase. The first key indication that you can find that a stock is starting to slow down or starting to reverse course or starting to turn around, if you will, is the RT. RT is that short-term price trend. It's cast on a scale of 0 to 2. So anything above 1 shows that the short-term trend is up. Below 1, short-term trend is down. So one of the things you can notice is that the RTs, we take a look at the graph, is starting to fall. It plateaued. You saw it moving sideways really throughout the last few weeks and now starting to sell off or now starting to pull back, giving you an early warning that, hey, momentum is momentum is waning here. We're starting to see some slowdown in it, giving you an early warning sign. But if it goes below 1, then that is confirmation telling us that, hey, now the short-term trend of this stock is now down. And therefore, that's an early warning sign to say, hey, if you've been in this, have some decent gains, make sure to lock those profits in. So rule number 1, follow the RT. If the RT goes below 1, that's a pretty tall tale sign that if you haven't started booking your profits now, you may want to start to consider to do so. So that's rule 1. Rule 2 is looking for price volatility. Now, this is more of a technical look to it or a technical approach to it, if you will, but identifying price volatility in a particular stock can be a great benefit to you. We've talked a lot about looking at candlesticks, talked a lot about technical analysis and all that, but when you look for price volatility, it's simply when a stock, we'll use end phase, for example. You see this nice run here. Actually, let me just zoom in real quick. Make it easier for everybody out there. There we go. So looking at end phase, you have this nice steady run. Cord's getting a little loose. You have this nice steady run all the way from pretty much the beginning of November all the way up until the middle of February. Then all of a sudden you gapped up. You had this huge jump in price. And then all of a sudden, from a nice steady rise, you had a big fall, but then a nice pop again. That is showing you volatility here. When all of a sudden you have just a smooth, consistent uptrend, and then you start to see price acting more erratic here, where it's going up and down more than it normally does, or it's trading outside of its daily trading range. That is a worrisome sign. That tells you that something is going on. There's starting to become a power struggle, if you will, between the buyers and sellers. And that's what's causing that big fluctuation to trade outside of its range on a typical basis. Well, what happens when you saw those big swings come in? Market drop, ENPH dropped as well, and you saw it quickly reverse and head south to one of the lowest levels we've seen in 6 months, or at least 6 months prior to that point. Now, yeah, it has recovered. You have a nice uptrend, but if you're a short-term trader, if you're more of a technical trader, this is something you want to keep an eye on, is identifying these volatile periods in stocks at either lows or highs, because that can help you identify when the turning point is starting to occur in a stock. You look down here. You had a straight drop, big pop, big drop, and then all of a sudden a nice steady uptrend started to emerge again. So you saw volatility at the bottom as well, giving you an indication that, hey, there's a power struggle again between the buyers and sellers. Maybe I should keep an eye on this and wait for a little bit of confirmation. All of a sudden, you saw that confirmation. You saw it hitting higher highs, higher lows. Jumped in, you had green lights back on the 26th of March and up until now, giving you opportunities to jump on board at the stock like this. So that's tip number 2. Price volatility and price direction can be key indications or key area to focus on when looking at the graph of a stock to identify when some weakness or when some change in sentiment may be starting to occur. but aren't a lot of the swings due to the overall market reactions? So, Brett, that's a great question. The swings, yeah, they're due to the overall market reactions, but at the same time, there's when you look at the graph of a stock, it's like the big picture of a stock. It's worth a thousand words, if you will. And regardless of what the news is doing, you will see the trading going on inside of the graph. And then all of a sudden you'll hear the news coming out. And that's, so yeah, you may see it, be correlated to what the reactions are. But overall, when you look at a chart, you can typically start to identify that before you hear the headlines stating that, the news is coming out. And that's when you see the major reactions. So you can start to identify some weakness or some power struggles coming in before that news hits. And that makes that bigger drop occur. So, this is a great way of tightening or knowing when you should tighten up your stops. So when that big drop occurs, you're locking your profits in, moving to the sidelines, and able to get back into the lower price. So, it's interesting that I talk about it a lot in our jockey club. I talk about it a lot here. You can typically see what's happening in a stock before you ever hear the news coming out for people's reactions to start actually taking place. That's why you want to always look at the graph of a stock. Hey there, Jay. Hey, Steve. Not a problem. Glad you're here. All right. So that's rule number 2. So rule number 1, look at the RT. If the RT drops below 1, that's a tall tail sign. Rule number 2, a little bit earlier than that, look for some price volatility. See if there's price volatility starting to occur. If you have a nice steady rise and all of a sudden you start seeing bigger swings in a stock, that could be a sign that the stock is starting to reverse course. May give you an early warning sign to start tightening up your stops. And Steve, we'll analyze any stock you want to take a look at in just a few moments. Once we get through this, we'll start to analyze your stock. So stick around for a few more minutes. We'll get to that for you. All right. Rule number 3 is using a moving average. So we'll go to the next stage or next stock. We've looked at end phase for a while. We get Apple. Now, remember, this is a list built by you guys, not me. I didn't cherry pick these, but built by you guys. So utilizing utilizing something simple, such as a moving average, is a great tool to enhance your portfolio. The default inside of VectorVest 7 is a 40-day simple moving average. And when you look at a stock, you can adjust that to fit that particular stock a little bit better. But a 40-day moving average is just a great place to start if you're getting started with it. So as we can see for Apple, for example, you had pretty much this nice run all the way up until the middle or beginning of this year, where Apple was just staying above the 40-day moving average. You broke down here. Let's say you got in when it finally crossed back above. It was 203, hit a high. Let's see. Let's get back into the graph so you guys can see this a little bit better here. Come on. There we go. All right. So back here, you had 203, right around $200 a share. Then all of a sudden, the stock ran up for quite some time. No worries whatsoever. All of a sudden, it gapped down at right around 300. So you made about $100 a share, had a nice steady rise, didn't have to really give too much worry on it. Were able to sleep at night. Kept you out from 300 all the way down to the low 2s. And now you're starting to get back in around 280 and capturing this nice run until 330 that it's trading at right now. So this is, a simple way. And if the stock is more volatile, you can, adjust that moving average to fit that particular stock. You don't have to use a 40-day moving average. That's, typically a default because it's a great place to start. But if it's a slower stock, you may loosen that up a little bit. If it's a more aggressive stock, you may tighten that up a little bit. You guys have seen me talk about the 3 and 8 exponential moving averages. You could do that as well using a combination of 2 and looking for crossovers with that, with a slower and a faster one, or just simply using price and, a nice moving average that keeps you out of the volatile periods or keeps you out of the big moves lower, but gets you back in for the big moves higher, is another great way of knowing that. But what is a good platform for a beginner to buy and sell? So Jay, to answer that, to be completely honest, there's a lot of different platforms out there now to trade. Trade on. Pretty much everything out there now comes with zero commissions. So it's more of an even playing field now. It really comes down to personal preference, what they offer, what your needs are. But if you want something simple, easy to use, if you want to trade through your stock advisory app, we do have a few different partners that we work with, such as Ally, Trade King, and a few other ones here. So if we go to more, go down to the Trade Now, Ally, Interactive, and Trade Station. If you're in Canada, we also have Quest Trade as well. But so those would be three of the partners that we have, hooked up to VectorVest if you're looking for that. If you're looking for just simply, analysis on your individual stocks, or if you're just looking for, a platform you can use on your phone, Robinhood is good. You have TD Ameritrade, which is one of the bigger names out there. Schwab, there's lots of them. So it really depends on what you're looking for. Give our support a call. I used to have a link for a website out there that compared and contrasted all the different brokers, but that was before when they all had different pricing and all that. So that may change a little bit, but there used to be a good site out there that would compare and tell you what you're getting and what you're not getting between all the different ones. So give our support a call. Maybe somebody has that link available and can help you out with that. All right, but good question. Thank you. All right, so getting back into it, we've covered 3 out of the 4. Pretty simple tips, but very effective tips at the same time. So we've talked about the RT, especially when it falls below 1. We've talked about looking for price volatility and direction. Here on Apple, another great instance. You saw a nice steady run, consistent, and then all of a sudden you started seeing bigger swings, higher or lower, more sideways action rather than a nice steady rise, telling you, hey, something's going on. There's a power struggle at this level. Maybe I should start tightening up my stops. And then all of a sudden, you saw the price go below the 40-day moving average. You had volatility there already. Price continued to drop. You had RT crossing below 1 a few days later. So yeah, we've seen all 3 with this example looking at Apple for right now. Now, the 4th and final point or tip on knowing when to sell is simply using the ratings. At the top of the graph, you can see a green, yellow, and red bar there. Green stands for buy, yellow stands for hold, red stands for sell. Simple. You can see throughout this nice run that we've been talking about, we had a buy situation on Apple for a long period of time. But then all of a sudden, you started seeing it hitting a hold right when it was coming close to that 40-day moving average, telling you, all right, something's going on. Maybe I need to pay attention to this a little bit closer here. Then all of a sudden, a few days later, you hit that sell rating on the 27th of February at 281. So if you didn't close out or you didn't start tightening up your stops when it was trading at the highs at 330, you didn't tighten up your stops when it dropped below the level of 1 on the RT, you didn't tighten up your stops or take your profits when the stock fell below the 40-day moving average, this is your final line in the sand. This is your final signal to say, hey, get out now or hold at your own risk. This is the way that the sell rating is designed. It's a final safety net, if you will. A lot of people see or think that the buy, sell, and hold ratings are a verb. They're telling you, hey, I need to go buy this stock right now, or hey, I need to go sell this stock right now. And that's not the case at all. It's a rating system, folks. It's telling you, hey, this is a good stock because it's participating in the market, it's moving higher, it's doing everything you want it to be doing if you're getting into it. If it has a sell, it's telling you that the stock is not participating in the market, it's not doing what you want to be doing if you're buying it, so therefore you should probably stay away from it right now. If it's a hold, then you want to do the analysis a little bit and more in depth and see, is it coming from a buy to a hold or a sell to a hold? And that would only be if you're really aggressive on it and really confident in that trade. I don't understand the difference between a 40-day moving average and looking for price volatility. So, Shakira, 40-day moving average is just simply that. It's a very basic way of looking at it that can be a very simplistic way of looking at it. Looking at Apple, for example. Apple finally broke above its 40-day moving average after pulling back a little bit back in August of last year. Well, stayed above that 40-day moving average, telling us that short-term momentum and the momentum of that stock is still moving higher, and didn't really come down to retest that 40-day moving average until the 21st of February of this year. Well, what happened when it broke down below that 40-day moving average? Price continued to move lower for quite some time, or continued to drastically move lower. It went from around $300 a share all the way to a low of $210. So you went from August until February. So what is that? 6 months roughly? 6 months of being long in the stock. And then in a matter of about a month or so, you went all the way back to where what took you 6 months to make a profit. You gave all that profit back if you held on to it in a matter of a month. So that's why we're looking at a 40-day moving average. Obviously, you could use other moving averages, whatever fits the stock better. This is just a good example to make it a pretty clear example of, why using a moving average on a stock can be a great tool to know, hey, the direction of the stock is starting to change. Maybe I should start taking my profits. Maybe I should start moving to the sidelines right now. So here, less than a month, you went from 300 down to 200. 6 months, you went from 200 to 300. So you don't want to give all that hard-earned cash back in a very short period of time. The price volatility, though, is looking at, we can actually use Apple once again. You had that nice steady rise in price, no real major pullbacks whatsoever. Then all of a sudden, you started noticing prices moving sideways instead of just a nice steady uptrend. You also see that you're starting to get bigger swings higher and lower all of a sudden. Well, wait a second. Apple hasn't been doing that for the last 6 months. Maybe there's something going on that tells us that from a buying and selling standpoint, there is a struggle, there's a fight going on between the buyers and sellers. That's what's causing it to move in bigger swings like that all of a sudden. So that's why if you're, somebody who looks at a graph a lot, this can be a great indication that, hey, maybe I should start considering to tighten things up a little bit because something's going on that doesn't seem right. Price is starting to act a little different than it has for the last 6 months. So therefore, you may want to be a little careful with that. How do you know when it breaks the 40-day moving average? Just by simply looking at the graph. We zoom in, let's say 6 months. It's pretty clear right there. Price was above the 40-day moving average, then all of a sudden, price is below the 40-day moving average. See, a lot of people supporting Robinhood. Awesome. I was one of the beta people on Robinhood before it really came out. So glad to see a lot of people still using it and still enjoying it there. All right. So if anybody is taking notes, just to quickly recap for you guys. The 4 things we want to look for is 1, price volatility and direction. When you start to see bigger swings or start to see, price going from a nice steady rise to a sideways move or more volatile moves or bigger moves, that volatility, there's a reason why that volatility is kicking in, and that can be an early warning sign. Tip 2, look at the RT. If the RT starts moving lower from a high level, that tells us, hey, something's going on. We need to pay attention to it. Momentum may be waning. If it breaks below 1, that is our, another clear indication that, hey, we're no longer in a short-term uptrend on that stock. We are now in a downtrend. We may want to tighten up our stops or take our profits. Tip 3, use a moving average. I use the 40-day moving average here, but you could use whatever you want. If you're looking at it, if you want to adjust the moving average to be a little bit faster, you go into the settings, go to moving averages, and you can use the up and down arrows here, Let's go 30. Or you could just simply click on the box, type in whatever you want, and then hit return. But now you see we get a tighter moving average to actual price. So that will give quicker entries and exits, but could also have more whipsawing occurring. But for a stock like Apple, it's worked fairly well here. So yeah, moving average. And step number 4, or tip number 4 that we're going to cover here today, look at the ratings. If it has a sell rating and you've been into that stock for a while and you haven't already started getting out, that is the final time to start doing so. You know, when it hits a sell rating, folks, that is our time to say you either need to sell now or hold at your own risk. Simple as that. So if you guys enjoyed or found any one of those 4 tips helpful and you haven't already hit that like button, please do so. Please share this video as well to spread this knowledge out with everybody else, all your friends and family. You know, who knows how many or, one of these tips could help make your friends or family members a lot of money, a nice nest egg for their retirement, help maybe, afford some bills that they weren't able to do previously. So please share it if you guys found this useful. Or if you've been enjoying yourself, make sure to hit that like button as well. All right, so on that note, let's go ahead, jump right into the fan favorite here today, where we'll analyze any stock that you want to take a look at and show you how you can do so right from your smart device in less than 20 seconds. So there is one that came in a while ago to start us off. GNUS, let's go ahead and take a look. All right, so GNUS, a speculative stock. You have poor long-term potential. You have a lot of risk with this stock, but you have high momentum. So overall, if you're a speculator, somebody trading intraday, this may be an opportunity for you, but if you're not, you're going to simply pass on this one. Looking at the graph, let's go ahead, zoom in to a 1 month. You see a big move higher yesterday. It looks like I had a pretty big move here today, but then now starting to sell off. People took their profits as it hit $12 a share. So this is a high momentum play. If this is not the stock, or if you're not a day trader or somebody that's a high momentum trader, this is not going to be a stock for you. Simple as that. All right, let's see. AGNC. All right, so looking at it here, I forgot to go over the analysis real quick. So the RV, the first indicator we'll look at, is the long-term potential of a stock. So 1.05 has better than average long-term potential out there over the next 1 to 3 years. RS is looking at the safety factor, or the risk involved with the stock. Below 1 tells us there's more risk with the stock. Above 1 tells us there's less risk. All 4 of these indicators are cast on scales of 0 to 2. So all you have to remember, above 1 is good, below 1 is bad. So decent long-term potential over the next 1 to 3 years, but to get that potential comes with a lot of risk. It's in a nice steady uptrend on a short-term basis, so therefore the stock is favorable. This is more of an aggressive stock and can have bigger moves, so just be careful of that and make sure you're trading stocks that meet your sentiment as well. All right, MELI, let's see. MELI. Poor long-term potential, more risk associated with it, but you have strong momentum. So speculative stock with strong momentum. If you're not a momentum trader, simply pass. If you are a momentum trader, this is a good stock for you. Let's see, BYND. BYND, poor long-term potential, a lot of risk associated with it, but strong momentum. Same situation as before. So therefore, if you're a momentum trader, great. If not, just simply pass on it. There's other stocks out there. Awesome. Thank you for that feedback there, Brian. Appreciate it. Glad you're here. CSCO, let's see. Oh, there we go. CSCO, good long-term potential, less risk associated with it. You have a nice steady uptrend. Therefore, the stock's favorable. RCL, poor long-term potential, a lot of risk associated with it. But you're finally starting to see that momentum picking back up, starting to see this stock starting to recover. So therefore, favorable if you're a momentum trader. NVIDIA, good long-term potential, less risk associated with this stock, really strong uptrend. Overall, the stock is favorable. DAL. DAL, poor long-term potential, about average risk involved with it, but you're finally starting to see some momentum picking up, so therefore the stock's favorable. Let's see. RTX. RTX, poor long-term potential, a lot of risk associated with it. It's in a steady downtrend. Overall, the stock's not favorable right now. ALT. ALT is a speculative trade. Obviously, we all know about this stock. It's a coronavirus stock. There's speculation galore throughout a lot of the biotech. So this hits it right on the head here. So poor long-term potential, a lot of risk associated with it, but you have some pretty strong momentum right now. So overall, the stock's favorable, but not by much. Let's see, BA. BA, poor long-term potential, a lot of risk associated with it, but you do have some momentum finally starting to pick back up for this stock, so therefore it's favorable. LOW. LOW, good long-term potential, less risk associated with it, nice strong uptrend, therefore the stock's favorable. Let's see, ICE. About average long-term potential, good safety, however, nice steady uptrend, therefore stock's favorable right now. SWKS. Poor long-term potential, but pretty decent fundamentals. Nice consistent earnings performance, so pretty safe stock. Really strong momentum play right now as well. Therefore, the stock is favorable. NMM. Great long-term potential, but a lot of risk to get to that potential. Nice steady uptrend on a short-term basis. Therefore, the stock's favorable. SEA. SEA, average long-term potential, a lot of risk associated with it. However, you have a really nice strong uptrend. Overall, the stock's favorable only for aggressive traders, though. VRTX. All right, so looking at VRTX. Wait. Didn't we just do that one? There we go. VRTX, great long-term potential, less risk associated with it, nice steady uptrend. Overall, the stock's favorable. Let's see. ECOM. Paul's saying, Doc, you might sell. So, Paul, go through the 4 steps that we talked about here today. See if they meet any of that criteria. If they do, then hey, maybe it's a good time to start, tightening up stops. But that'll answer your question. Go through what we talked about and see what those steps tell you. ECOM, great long-term potential, a lot of risk associated with it. However, nice steady uptrend. Overall, the stock's favorable. I'm not going to do LK because is LK even trading anymore? TDOC. Let's go TDOC. Poor long-term potential, a lot of risk associated with it, or more than average risk associated with it. Stock is flat, therefore it's not favorable right now. Doesn't have momentum, has a lot of risk, has poor long-term potential. Nothing really going for it currently. LSPD. I'm not seeing that here. Is that the U.S. markets? What market is that in? If it's U.S., we can pull it up, or if it's not in here, we can get it added to our database. That's a great thing about VectorVest and being the company who we are. If there's a stock that you guys are interested in that we don't have in the database currently, all you got to do is simply send us an email with that stock symbol in it, and we can get it added. Typically, we add new symbols once a week, every Thursday. So if there's stocks out there that you guys are interested in, you can't find, just simply shoot us an email with that symbol, and we'll get it added to the database for you. All right, so looking at Best Buy. Good long-term potential, about average risk associated with it, but you have a nice strong uptrend, so therefore the stock's favorable right now. MRNA, probably going to be tanking most likely. Poor long-term potential, a lot of risk associated with it. However, even with the volatility on a short-term basis, you still have an uptrend in place, but it's not strong enough to make the stock favorable. BABA. BABA, good long-term potential, less risk associated with it, nice steady uptrend, overall stock's favorable. Barron says Stitch Fix is a winner post-COVID. Does VectorVest agree? Let's take a look. Stitch Fix. That's the thing, is I don't know the symbol. So if you don't know it, you can just start typing in the name. You can see you get search results here. SFIX is Stitch Fix. Let's go ahead and take a look. Stitch Fix, poor long-term potential, a lot of risk associated with this stock. You have a nice strong uptrend on a short-term momentum basis, so therefore it's favorable. But if you're not a aggressive trader, I would not recommend this stock to anybody, just simply because it has poor fundamentals. It doesn't have a lot of consistency or longevity in its financial reports. Take advantage of the momentum, but long-term play, you're taking on a lot of unnecessary risk out there. Great question, though. Let's see. Shop, SHOP. Shop, poor long-term potential, but you have really solid fundamentals, so less risk associated with it. Nice strong uptrend, therefore the stock's favorable. Mark, MARK, poor long-term potential, a lot of risk associated with it. Really strong momentum play right now, however, so therefore the stock's favorable, but just barely. Let's see. USIO, poor long-term potential, a lot of risk associated with it. You have a little bit of momentum to the upside, but not enough to make the stock favorable. BTG, let's take a look. BTG, there we go. Great long-term potential, a little bit better than average risk associated with this stock. You're in a nice steady uptrend, so therefore the stock's favorable. Let's see. Also, if I analyze your stock and if I got to your stock today, don't forget to hit that like button if you hadn't done so already yet. All right, COTY. Oh, wrong one. COTY. There we go. Good long-term potential, a lot of risk with it, however. Timing is about flat, so therefore the stock's not favorable currently. DIS. Where on the VectorVest website do we find what you are doing? I'm new to VectorVest. So Steve, what do you mean find what we're doing? Right now we're just going through the app, just analyzing the stock. I'll show you here in a second where you can find some tutorials, especially if you're new, or if you're on the VectorVest 7 platform. Make sure to take advantage of the free one-on-one coaching. They'll cover everything you need to know in a very simplistic manner so you don't feel overwhelmed by it, to help you get the most out of your VectorVest right out of the gate, especially if you're new to VectorVest in general or just new to investing. All right, so COTY, we looked at that one. All right, we'll do two more, then we'll start to wrap things up for the day. But also, if I didn't get to your stock, that's okay. If you're already a subscriber, just simply go into the app, click on the magnifying glass, type in your symbol. You can get the same analysis that we're covering here today. If you're not a subscriber, but you want to take advantage of it or analyze your own stocks, there is a link in the pinned comments you can click on, download the 2-week free trial of it for free, and then give it a go. As the old saying goes, seeing is believing. Put it to the test and, let it prove itself to you. There's no doubt in my mind, once you start seeing the power that it can provide for you in your portfolio, that you won't want to have this at your side all the time. All right, so looking at Disney. Disney, poor long-term potential, a little bit better than average risk associated with it, though. Really nice, strong momentum, getting a nice bounce off of those lows. Overall, the stock is favorable here. Let's do one more. Let's see what the one more is going to be. Apps. All right, we'll do apps. I see a lot of people requesting that. APPS. So apps, great long-term potential. A little bit more than average risk associated with it, though. But look at that momentum, 2.0. It's at the peak it could possibly go. Now it can stay at 2 and continue to move up like it is, but you're never going to see the RT higher than 2.0. So because of that strong momentum, because of that good long-term potential, the stock's favorable right now. So With that in mind, let's go ahead, jump back into the home page. As you can see, things have definitely started taking a little bit of a turn here. We're now only one tick into the green. Looking down at the color guard here, price is now dropping. Our T is now flat on a day-over-day basis, but still higher week over week. Buy to sell ratio pulling back from those highs that we saw earlier, but still higher day over day and week over week. Looking at the advanced declines, this is why we like to take a look here every Thursday at the advanced declines, because we were seeing we weren't at a 2-to-1 bias for advances and declines, and now all of a sudden we're starting to see the tables turning. Now we're at 40% of stocks advancing and 50% of stocks declining. So that's why we always talk about looking at that, checking that before placing a trade for the day. It's all about probabilities and making sure the odds are in your favor. Looking at the major indices, however, the Dow is now back in a negative territory. NASDAQ's down over 0.5%. S&P's down a third. VectorVest Composite down 0.4%. And on that note, folks, I highly urge you to go into your portfolio and run through these 4 tips we talked about here today, and go through your stocks and utilize or take a look to see if any of your stocks meet those 4 criteria to help keep yourself protected, help ensure that you're locking in your profits sooner rather than later. All of that to help you become better investors, more successful investors, because that really is our number one goal here at VectorVest, is to help you be more successful and become financially independent. And on that note, it's been my pleasure being with you here today. I hope you all have a great rest of your trading day. Be safe out there. Take care. And we will see you all on Thursday next week at 11 a.m. Eastern. Bye for now, everybody. Have a great day.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.